All right, another FOMC meeting. You got Bitcoin pulling back slightly before the FOMC meeting. The truth is, I hope people aren't expecting too much from this FOMC meeting, because we do have what we call the Fed Whisperer, a guy called 𝗥𝗲𝗹. He's what they call the Fed Whisperer. And usually when the Fed want to leak a message, they kind of leak it through 𝗥𝗲𝗹, right? And what he says is, he says, Fed officials agree that rate cuts aren't appropriate until they see concrete signs of slower spending and higher joblessness. But differences are flaring over how confident officials can be that price increases from tariffs and shortfalls will be temporary. So there's a clear message coming out of the Fed that there's not going to be rate cuts today, but I think we do have a lot to talk about today, right? Not only the clear message from the Fed, but if you look here, if you look at the probabilities, 3.1% probability of rate cuts. I don't think that's going to happen. Holly, should we put the prices up on the screen? Because I see our prices aren't up today. And you know, today is a very important day to actually have prices here. Today, we're going to be covering a lot of things. We're going to be covering what's happening with the Fed. We're going to be covering what's happening with China. We're going to be covering India and Pakistan. We're going to be covering why gold is skyrocketing over here. You can see that gold over here, absolutely skyrocketing again. I'm going to show you exactly why it's skyrocketing and why that actually may move to Bitcoin. And then I want to address the elephant in the room. I want to talk a little bit about alt season, because I see some people saying that it's alt season. Anyone who tells you that it's alt season, I mean, you got to delete their number, because it is not alt season. I'm going to prove to you that it's not alt season. And actually, I'm going to show you that alts are actually in a bear market, right? Alts are in an absolute bear market. So listen, we didn't do a show this afternoon. We got to do a big show now. It's got to be massive. If you're not already subscribed to the channel, you know what you need to do. Bang! Join the 1.161 million subscribers to this channel. Also, obliterate the like button. We've got a big show ahead. We're going to have a lot of fun here today. Let's get going, guys. People, we have one objective. We have to make this the biggest FOMC stream in the world tonight. So I'm counting on you to obliterate the like button, to tell your friends. Let's get the numbers up here. Let's be the biggest live streaming show in the world tonight, streaming the FOMC. We got to beat CNBC. We got to beat the actual FOMC meeting tonight. That is our objective here. We're a single-minded objective. All right. While we are waiting, quickly, let's have a look at the markets, because let's see what's going on ahead of the thing. Bitcoin has slightly come down from its high. Its high was at about 90. Wow, was it as high as that? Gee, 97,780, almost 98,000. We're now back down to 96,271. Remember that this is normal before an FOMC. In about 1 minute, we're going to find out that there's no rate cuts. Okay, so I'm waiting for it. The best place to get the news here in the newsroom. Let's just see. Trump has just begun a press conference on tariffs 5 minutes before the Fed decision. Can we get live? Can we tune in live to the Trump press conference? Guys, send me a link. Let's tune in live to the press conference. That's very strange timing here. Let's quickly click on that. You can also get this on the newsroom. It's all on the Banter Bubbles newsroom. President Trump has just begun a press conference on tariffs and trade 5 minutes before the Fed decision is to be announced. Over the last month, President Trump has been calling for the Fed Chair Powell to cut rates and looked for ways to fire him. Is this a coincidence? Let's actually see. Let's see. Researchers, if we can get a link to the Trump press conference, that would be absolutely fantastic. Absolutely fantastic. Also, today, if you open an account on 𝗏𝗏, there is a link under here. There's a link. Let me show you where the link is. While we are doing this, let me show you where, oh, okay, hold on. Let's look at here, Crypto Banter. Let's show you where the link is. So if you open an account on 𝗏𝗏 today, while the show is live, you don't have to KYC yourself, right? You can trade, and you could have $5,000 in your account before the end of the stream. That's how quickly things are going to move here. But you have to use this link over here. You see this link over here? Have to use this link over here to open your account. By the end of the stream, you see I've got a live spreadsheet here populating the user IDs that have opened accounts. By the end of the stream, you could have $5,000 in your accounts. I'm going to be doing it. Okay, we have rates news. Rates, as we said, bang, unchanged at 4.25. We will be getting live information over here. In the newsroom. As soon as it basically happens, we'll be getting live information at the newsroom. Here we go. Okay, I'm getting so much information here. I'm getting so much information sent to me from many places. Let's quickly just look at what's going on in the market. So we knew there wasn't going to be a rate cut. There hasn't been a rate cut. Now let's look at the probabilities of a rate cut in the next meeting, which is actually in June. So the next meeting is actually in June. There we should have higher probabilities of a rate cut. We should have higher probabilities of a rate cut. Okay, now as it stands right now, 30.5% chance of a rate cut in June. But remember, that's as it stands now. Everything will change. Everything will change in a few minutes. All right, the next thing is the reason. So we have Bitcoin that went slightly up. The reason why Bitcoin went slightly up in the last 24 to 48 hours is actually multifold. Okay, so the first reason is gold has shot up. And the reason why gold has shot up, we're going to talk about in a second. But what we do know is that Bitcoin has been tracking gold much better. If you look at the correlation between Bitcoin and gold, it was at the end of February, it was a negative correlation, which means that when Bitcoin went up, gold went down. And when gold went down, Bitcoin went up. Now you have Bitcoin and gold almost moving in a 0.6. So it went from negative 0.6 to positive 0.6, which means that gold and Bitcoin are starting to be more aligned. Okay, so gold and Bitcoin starting to be much more aligned. The second reason why Bitcoin has been going up is because it seems that China is meeting with Scott Bessent. And what they've decided to do is, after all this posturing, they've actually decided that they're going to start negotiating. And there's a lot of technicalities to the negotiation here. I would say that this is one of the hardest and most important negotiations in the world. This is like we know how hard it is to negotiate as companies. We know how hard negotiation is. Specifically, I did multiple courses at Harvard about negotiations. And we learned the art of negotiation. And there's so much going on here. The first thing is the US anchored China with very high tariffs. China has been posturing. We're not flinching. China played a very good game by not revealing their cards. Then both parties delayed. Now the next question is, where are they going to negotiate? They can't negotiate on US soil, because if they negotiate on US soil, the US has an advantage. It's like when you're playing football. It's the home side has always got an advantage. They can't go to China, because then China will have an advantage. So coincidentally, listen to what Scott Bessent says here. It's very coincidental. Listen to this. The world has been coming to the US, and China has been the missing piece. I was going to be in Switzerland to negotiate with the Swiss. Turns out the Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And look, we have shared interest that this isn't sustainable, as I said before, especially on the Chinese side. And 145%, 125% is the equivalent of an embargo. We don't want to decouple. What we want is fair trade. So they're meeting Saturday and Sunday for the negotiation. Now, I hear some people saying, oh, well, the deal's going to be done very quickly. The deal ain't going to be done very quickly. This is the most complex negotiation in the world. I don't think that to date there has ever been a negotiation that has been this complicated. The last time that a trade deal happened between China and the United States, it took over 18 months. Talks took 18 months in 2018 and 2019, with escalations in between, Trump even dropping a surprise 25% tariff on China during these talks. That was in 18 and 19. Prolonged talks will also still drag down economic metrics. Part of the game in this negotiation is making the other side hurt for as long as possible while you are reviewing the paperwork, right? So that's basically one of the things that's going to be happening here. So I would say that now this is the beginning, and that markets shouldn't get too excited. And actually, if you look at it, markets didn't get too excited. I mean, the S&P is up 0.28% on news of the fact that China is talking to the United States. So let's watch this negotiation, but let's be smarter here. Let's understand that this is one of the most complex negotiations that the world has ever seen. This is like separating the world into two sides. And there's, will you buy treasuries? Will you devalue your currency? What will you buy from us? What will we buy from you? What jobs will you bring into the United States? What will the tariffs be? There are so many levers to negotiate here. I'd love to be a fly on the wall in this negotiation. I've got a very, I'm very, very, I've got a very a big interest in negotiations. I studied it actually at Harvard. And I really, really, really love the art of negotiations, but it's much, much, much more technical and much, much, much more complicated than you think. I would be surprised if we get a deal here with China any time before the end of the year. We may get small pieces of a deal every now and then. Anyway, the second reason why the markets or the gold market is rallying, and remember that Bitcoin and gold have started to become very, very, very aligned, is because India seems to have attacked Pakistan. Okay, so there was some attack between India and Pakistan that happened yesterday.
Operation Sindoor was launched by Indian Armed Forces to deliver justice to the victims of Pahalgam terror attack and their families. 9 terrorist camps were targeted and successfully destroyed. Over the last 3 decades, Pakistan has systematically built terror infrastructure. It is a complex web of recruitment and indoctrination centers, training areas for initial and refresher courses, and launch pads for handlers. These camps are located.
So basically, India is saying, look, we did attack Pakistan, but we attacked very strategic. We attacked 9 strategic terrorist targets that actually happened. And the reason is they're saying that Pakistan was responsible for a terrorist attack on India. And so now India is basically retaliating and trying to break up this Pakistani terrorist organization. India has conducted what is described as precision strikes in neighboring Pakistan. 26 people, including a child, were killed in overnight missile strikes, and 46 others have been injured. So there are escalations between India and Pakistan. Now, I do agree with Patrick Bet-David, but I'm not sure that I agree with him 100%. He says, the timing of the India-Pakistan war is very interesting. The moment Apple and others announced that they're moving away from China to India, all of a sudden there's a war in India. I mean, can you believe that? Tariffs are destroying China, and this is their way of causing chaos. Maybe. I don't think that the timing here is coincidental. They will call this the first iPhone war. China is attacking India via its proxy, Pakistan. Why? Because all iPhones will be made in India going forward, because there is speculation that the first trade deal that is going to be announced by the United States. Now, remember, the United States has to announce a banger trade deal as the first one. It can't be like, they can't be doing a trade deal with like Austria or something. That's too small. They've got to do a trade deal with someone big. Hold on, I'm getting, okay, this is Trump. Guys, do we have the stream that where Trump is speaking? Researchers, if you could just give me some feedback there. Also, guys, remember that everything that we're writing about here, the resolution between China and the US, India, Pakistan, everything has been written in the free newsletter. You can get the free newsletter by going here. It's called Good Morning Crypto. And if you're a chartist and you want 6 charts every single day, you just click on here, free newsletters. Go and sign up now quickly while you're here. Go and sign up. So that is why Bitcoin is moving up. 1, it's because gold is moving up. 2, it's because of tensions. And why is gold moving up? Because tensions between India and Pakistan. The third reason why people are moving into gold is because just in general, people want to move away from risk. Right now, markets are really nervous. There's too much uncertainty in markets. Markets don't like uncertainty. So what are they doing? They're moving away from risk. Where are they moving to? So the reason I tell you they're moving away from risk and they're moving away from all risk is if you look at this, what you can see is that if you look at the net inflows into treasuries and gold. So treasuries and gold have got very high net inflows. When do people move away from equities into gold? In times of political uncertainty, in times of uncertainty, people move to gold because gold is a safe haven asset. The other safe haven asset is they say, listen, let's just lock in 4.5% yields on fixed income securities. We're happy with our 4.5%. Let's just lock in because there is so much uncertainty that is actually happening. And so right now, there's a massive move into gold. But I'll show you something very interesting, right? Massive move into gold right now. China is buying gold at a rate never seen before. Look at the change in the Chinese gold reserves from 2.26 tons to 2.28 2.29 tons. They keep buying more and more and more gold. So China buying tons and tons and tons of new gold. Also, people moving into money market funds. Currently, about $7 trillion. That's actually in money. This is $7 trillion, which is currently sitting in money market funds. People that are happy to take 4.5% on their money, right? Now, what's cool here is that Bitcoin seems to be really becoming the digital gold. This is a post from Hunter Horsley. I think he's from Bitwise, if I'm not mistaken. I think he's from Bitwise, CEO of Bitwise. And he says, I don't know if people appreciate how significant this is. Gold is having its moment. And despite that, investors are buying more Bitcoin than gold. Imagine that. You can see he's measured how much money is going into IBIT and how much money is going into GLD. GLD is the gold ETF. And more money is actually going into Bitcoin than gold, despite the fact that gold is having its moment at the moment. So you can see that. All right, let's look. All eyes now on the Fed. Let's quickly go on to all eyes on the Fed. Here is a summary from 𝗙𝗏𝗧𝗏 letter about everything that is happening on the Fed. So the first thing is they leave rates unchanged for the third straight meeting. Powell says inflation remains somewhat elevated. Of course, he always says that. But I mean, I don't know why he keeps saying that inflation remains somewhat elevated. Inflation is at 1.46%. I don't know if that's, I mean, he said inflation target is 2%, right? Inflation target is 2%. Also, so here is, let's just quickly go through it. Uncertainty about the outlook has increased further because of tariffs. And this is where I think Trump shot himself in the foot. If you don't give clarity about tariffs, how do you expect Powell to make any interest rate decisions? The guy can't forecast forward because he doesn't know what tariffs are going to be. Today they're 40%, tomorrow they're 25%, then they're 145%. What do you want the poor guy to do? Like, he cannot forecast what the hell is going on. Risks of higher employment and inflation have risen. High unemployment and high inflation, stagflation, not a good situation. The Fed is attentive to risks on both sides of the mandate. The Fed appears to see higher risk of stagflation ahead. Stagflation, worst case scenario. It's the worst case scenario. Let's call up ChatGPT. ChatGPT is very, very, very good at this. Look at this. I've actually been using it quite a lot now to break down things, to say, explain like you are a YouTube. So watch this. This is a good prompt. Streamer. What is stagflation? And why is the Fed scared of that? Great. It'll give you a great explanation. I've done this already. Camera fades in. YouTuber hoodie. I must be in a hoodie. Okay, I don't have a hoodie here. Hardest, can we put the aircon on, bro? It's boiling here. I think I'm going to die. Stagflation is a stagnant economy plus inflation. Sounds weird, right? Normally, if prices are going up, inflation is going up, it's because people are spending. But in stagflation, you get the worst of both worlds. You have an economic slowdown, and you have high unemployment, and you have high inflation. And the Fed basically runs out of tools when that actually happens. And that is the worst case scenario. And that Powell, I think, is staring down the barrel of that. Now, let me say this. If Powell doesn't reduce rates very, very, very soon, and they do go into recession, then it's Powell's recession. It's going to be Powell's recession. Then Trump's going to say, look, Powell has put us into recession. It's not Trump's recession, it's Powell's recession. But on the other hand, Powell can't cut interest rates. The reason why he can't cut interest rates is because if he does cut interest rates, then what happens? Then the tariff prices are going up. Crazy. Okay, remember guys, sign up to ɓloFin before the end of the show. We automatically get your user IDs. By the end of the show, you could have $5,000 in your account. It's that simple. I see a lot of people signing up. Go, gentlemen, go. We're gonna make people rich tonight. We're gonna make people rich. And mark my words, today people are gonna be rich. And you can trade no KYC, zero KYC, no KYC. Sign up from anywhere. Okay, let's see what else is going on here. Okay, so this is the changes to the Fed statement. Okay, although swings in net exports have affected the data, recent indicators suggest that economic activity has continued to expand. So he's basically saying, look, we don't know what the hell's going on with net exports. Okay. The committee seeks to achieve maximum unemployment, blah, blah, blah. The economic outlook uncertainty has increased further. Trump, what have you done, bro? The committee is attentive to the risks on both sides of its dual mandate, and the judges that and judges that the risk of high unemployment and high inflation have risen. Trump, what have you done with your trade wars? You've made higher unemployment and higher anything. What they cut here, they said, beginning in April, the committee will slow the pace of its security holdings. Now, this is something really interesting because they said they're going to slow down QT, but they're not going to start quantitative easing. But the Fed bought $14.8 billion worth of 10-year Treasury yield yesterday, therefore putting $14.8 billion into the economy yesterday. This is on top of the $20 billion that it bought yesterday, which means in the last 2 days, the Fed has put $34.8 billion into the economy. Crazy, right? So let's see what Powell says about that. I'm sure that he will actually be asked a question about that. In the meantime, China is panicking. China is now stimulating the economy like crazy. They've actually done two things to stimulate the economy. The first thing is that they have reduced the requirements of the banks to hold certain assets, and thereby so the central bank will set up a 500 billion yuan relending tool for consumption LDK. It will also increase technology relending fund by 300 billion, plans to increase agricultural, small business. So basically allowing the banks to do more liquidity. Also, they cut the interest rates to 1.4%. So they are reducing interest rates from 1.5 to 1.4. And the People's Bank of China told a news briefing that the reserve requirement ratio will release about 1 trillion yuan, $138 billion into liquidity. So more money coming into the economy. China is stimulating the economy hard. It's stimulating hard, but hard. So let's just quickly read a quick summary of this. The US and China have been quietly improving relations. Last week, China exempted 25% of US imports from tariffs, blah, blah. China and the US are due to talk on the weekend, Saturday and Sunday. Meanwhile, China lowered interest rates from 1.5 to 1.4% and cut the reserve requirements. Will the Fed follow? I don't think the Fed's going to follow because I think now it's become a stubborn battle between it's become a battle between two stubborn people, Trump and Powell, right? And I think Powell is saying, I want data. I'm not doing anything until I get data. And until I get my data, I ain't doing anything. All right, we have 12 minutes until Powell starts talking. 12 minutes to go. Let's look at the altcoins. So, I mean, a little bit of a green day today. Some moves, stacks up to 12.41%. Pulse. You know, Pulse and Hex, I think I saw Richard Hart actually did a stream. I don't know if you guys saw this, but the reason why Pulse is probably going up is because it seems like Richard Hart is back. I think I actually listened to his stream this morning. You know, I listened to everything.
Hey, Richard Hart here. Guess who just beat the SEC in court and did not settle and did not have their case dropped? This guy. Me. I did that. And you know why I did that? Well, 1, I'm innocent. 2, I've got great lawyers. 3, the government decided to bring a really stupid case against a really honest person. And guess what happened? The judge saw through it and dismissed the case in its entirety, something that almost no other cryptocurrency has ever achieved. And they didn't just charge me. They charged me, Hex, Pulse Chain, PulseX. They actually charged software as a defendant. Can you imagine that? Can you imagine math that you can run at home and execute on your own?
So Richard Hart is back, and that's why Pulse and Hex are actually moving. Generally, let's just quickly jump to the stock market because I think more and more so Google down 9.42%. That's because Apple is talking about doing some kind of AI. Disney up 8.8%. I think they had results, and I think the results were very good. So Disney up 8.8%. Spotify up 2.52%. Guys, all of this information is available for you on Banter Bubbles. You've got crypto, stocks, and you've got the newsroom, and it's all free, baby. It's all free. Everything is for free. All right, let's talk about altcoins and where we are with altcoins. So, look, I don't know what you've heard, and I don't know what you've read. But I can tell you, not only are we not in a bull market for altcoins, but we're in a bad bear market. Now, I'll tell you, I think we've got to address the elephant in the room. We've got to call a spade a spade. We are in a bear market when it comes to altcoins. Ask me how I know. Because there are certain signs of things that happen in a bear market that you have to accept. The first thing is markets don't respond to good news. Now, you can say whatever good news you want about altcoins. The altcoins ain't moving, right? So that's the first thing. The second thing is, remember, in the bull market, unlocks didn't actually matter, but now the thing has turned. And whenever we get an unlock, you can see the prices of tokens actually get smashed, right? It's happened with everything. With Morpho, it happened with Ronin. It's basically happened with all of the tokens. And the reason is that there's no liquidity at the moment. There are no buyers. There's no one coming to actually buy those tokens. Also, if you look at Bitcoin dominance, I mean, I would be buying this altcoin. This is a coin which is just going up and up and up and up and up. We are at a cycle high. We're almost at last cycle's high. Let me just go back to last cycle. Like we're getting very close to that 70% level on Bitcoin dominance. So, I mean, I don't know what anybody else is telling you, but I can tell you that right now we are very, very, very much in an altcoin bear market. There is no altcoin bull market at the moment. I think what's happened is that the market has actually decoupled. So you've got to, I'll give it this. Bitcoin is definitely in a bull market right now. And I think that Bitcoin's in a bull market because gold's in a bull market. And Bitcoin is starting to be correlated to gold. But the altcoins are being treated like venture capital. And in a period of max uncertainty, which is where we're at the moment, people don't want to be going into the risky end of the investments, which is great news for Bitcoin because Bitcoin is starting to be seen as a safe haven asset. It's starting to be seen as a safe investor asset, somewhere where investors can run to. And altcoins are being seen as venture capital. And right now, there is a zero demand for venture capital. I can tell you that much. Let's see what's going on here. There's stuff still coming in. This is relevant for altcoins related. Let's just see what this is. The researchers are sending me stuff left, right, and center. So let's see what they've just sent me. So with QT continuing, it seems likely that alt BTC pairs will continue dropping. So QT is continuing. Did they say that? Did they say that QT is continuing in the Fed statement? I don't know. I don't actually see it. All right, the NASDAQ reaction, and let's have a look here. This is the NASDAQ reaction to the what happened. But I think this is a 5-minute chart. So you see, don't be fooled by these things because like let's just see what is the NASDAQ doing at the moment. All right, let's quickly go here. S&P flat, 0.5%, zero flat. Let's quickly look at the NASDAQ. So let's look at QQQ. QQQ is the NASDAQ ETF. The big NASDAQ ETF right now is 0.5% down. Nothing's happening. Nothing happening. Powell starts speaking in exactly 7 minutes. That means that you have 7 minutes. Oh, whoa. I see people are signing up. So sign up for Blowfin. You could have $5,000 in your account before the end of the stream. Someone says, where's Dylan tonight? Hardest, phone Dylan. Tell him we need him. We need him, bro. Wait, I'm going to phone you. Let's phone Dylan live. Hardest, can we get guests on?
Send him a link and sort it out.
Hold on. Let's first see where's Dylan. I wonder why Dylan didn't join me tonight. Let's see where Dylan is.
Hello, sir.
Everybody's asking where you are, bro. Everybody wants to know. Why aren't you on the stream, bro?
Because I'm streaming for chart hackers as we speak.
Oh, so you're not joining my stream, eh?
I'm on chart hackers right now. We're streaming, but we're watching you. Look at this. I've got you up.
Okay, amazing.
We're watching Uncle.
Amazing. All right, brother. Much love. Are we having breakfast tomorrow?
Yes, please.
Okay.
I appreciate that.
Breakfast tomorrow, sir. I got breakfast with him tomorrow. All right, we have 6 minutes. 6 minutes for you to sign up onto Blowfin. By the end of the stream, you could have $5,000 in your account. And you can trade anywhere in the world. No KYC. Anyway, here is the Fed stream of... oh, wow. That's me. That's the Fed stream. Let's just quickly catch that up to make it live. All right, we're waiting. Hey, bro, come on. Let's go to there. Stick there. Okay, we're waiting for the Fed to stream. They're going to be another 5 minutes. We got 5 minutes of pretty much Q&A. Also, what we can do is we can look at the newsroom and just see what's happening in the newsroom. So I'm going to just refresh this page over here. And I mean, the altcoin market is so depressing. Honestly, it just has become so depressing. The US is pressuring countries to facing tariffs to approve Elon Musk's Starlink service. I've actually also heard that. Robinhood blockchain. Robinhood plans blockchain for trading US assets in Europe. Why not just use Solana? I don't get it. I really don't get it. Federal Reserve kept interest rates unchanged. Yes, we know that. Policymakers. That's coming from frontrunners. Frontrunners. Good. With QT continuing, it seems likely that old BTC pairs will start ripping. Yes, we've already said that. Okay. I see. Sure. So much information coming here. QT mentioned in the third paragraph the red strike through. Let's quickly look here. Okay. Third paragraph. Red strike through. 1, 2, 3. Yes, but this they took out the QT thing because that's what they said last month. Okay, everyone must just relax in their slacks. Let us prepare our screens. So in order to trade this market effectively, I think we should be watching BTC USDT. That's the first chart that we need to be watching, right? And we need to get rid of that. And we need that on the 3-minute chart so we can watch that while Powell is trading, right? So while Powell is talking. I think the other thing that we need to watch is... Okay, so that is the first chart we're going to be watching. The second chart we need to be watching today is, I think we should be watching the 𝗙𝗧𝗓. The 𝗙𝗧𝗓 is a good one to watch. Let's see how the dollar responds to what Powell is saying. Okay, and the third chart that we want is we should probably watch one of the stock markets. So let's actually take here and let's take the stock market. Let's watch the QQQ. Let's watch the QQQ. And let's put them all onto 3-minute charts. All in preparation. You got 3 minutes to sign up to Blowfin before we start. And then that is Powell's page. So let me lay out these pages beautifully for us. Let's do it beautifully. So we have Bitcoin over here on the 3-minute chart. You can see it beautifully over here. Under Bitcoin, we will put the NASDAQ, the QQQ, but which is actually the NASDAQ. It's the ETF of the NASDAQ. Over here, and that's also on the 3-minute chart. You can see them beautifully on the 3-minute chart. Over here in the top left corner, top right corner, depending where you are. Over here. And then the last one that I need to have the 𝗙𝗧𝗓. Now I would say that our setup is absolutely prepared for a banger FOMC. We have it. How does? What do you think, bro?
Good.
If you want to listen to the Fed's elevator music, I think they should play music that's more in line with the mood of the meeting. You know what I mean? Like every day, they should play music more in line with the mood of the meeting. Guys, obliterate the like button so we can get all of our friends here today. We need to get all of our friends here today. While we're waiting, let's have a look here. Hold on. Okay, let's have a look here. We have 1 minute to go until Powell starts coming on. 1 minute to go. 1 minute to go. Let's see what's going on here. The committee will continue reducing its treasury securities. Oh, goodness. Fuck's sake. Oh, here we go. We need Powell, bro. We need Powell. If you haven't opened a Blowfin account, open a Blowfin account. And your UID will be there. By the end of the stream, you could have $5,000 in your account. That's how we work. We like instant gratification. That's how we work. Wait, the stream should be starting now. What's going on? Okay. No, it hasn't started yet. I mean, it says 2:30. Okay, here we go.
There we go.
All right. Okay, why aren't I hearing anything? Is it because he's not talking yet? Quite deadly quiet. Blah. I'm just checking because I can actually get the same feed from the Fed's website, which is about 10 milliseconds faster, by the way. Okay, Ready? He always wears a purple tie. Have you noticed that? Because it's a mix between blue and red.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook.
That's good.
Largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal.
He's quite bullish on inflation.
Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
No, you don't.
Steve
Leisman,
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well,
good question.
So as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick Tamaris from Wall Street Journal.
Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each
Trump shot himself in the foot.
That goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out.
Trump shot himself in the foot, guys.
Make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops. And I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence.
No one knows. No one knows
of the tariffs. So that's that. In terms of preemption, you know, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got you know, forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
You know, so first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, you know, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time. So, again, difficult judgment to make, and not one that we face today, and we may never face it, but you know, we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation at the same time in about 3 years. The jobs report, you said solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are where we are. Is you know, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't, and we just don't know.
You can't break this guy. You cannot break him.
How this is going to settle out, and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, you know, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated.
Unbreakable.
The downside risks
unbreakable.
have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen. But they haven't materialized yet. They really have. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious.
If you haven't signed up to 𝗏𝗏,
the right thing for us to do.
We are going to be giving away the $5,000 before the end of the stream. There's a link below. You've got to sign up using that link before the stream's going to end in less than 10 minutes. So you have less than 10 minutes to sign up to 𝗏𝗏. Go and do it. It's a non-KYC exchange. You can trade Bitcoin futures. It's an unbelievable exchange. It's become one of my favorite exchanges.
Very good place, and wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there, and I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe
this
show
guy
up overnight,
is unbreakable.
Show up over weeks and months.
Come
and
on.
That may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple
5 minutes to open your Blowfin account. 5 minutes to go.
Welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential. And we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network of greening the financial system. So we didn't do much.
All right, I think, guys, I think it's getting a little bit boring.
And I've said this,
and I think we should make this
times.
short-lived.
I think
should we make it short-lived?
It's a real danger for us to try to take on a mandate.
So I think, long story short, there are no rate cuts. Powell is being a rigid fuck. Honestly, this guy is being so rigid. And he's unbreakable. Basically, this guy's unbreakable. But I think, just like he said it's got to be short-lived. I think it's time for us to end the stream because he's really just saying the same thing over and over. So where do we leave the stream? Bitcoin, 96,350. We have the NASDAQ, the QQQ is currently QQQ is down negative 0.18%. So markets don't know how to interpret this news. Let's quickly just take a look at the altcoins quickly. Let's just see what's going on in the altcoins. We have PulseX up, Fartcoin down, Stacks up, Virtuals down. In the top 200, we have, if you don't have this app on your phone, I mean, who are you? Kaito up 41%, Brett up 8.9%. 𝗥𝗲𝗹, my favorite cross-chain protocol, up a little bit today. Alrighty, so now today, for those of you who have signed up for Blowfin, we have all the UIDs that have signed up during the show for Blowfin. JP will be an excellent poker player, Laurie says. Yeah, bro, he's unbreakable. That guy's unbreakable. He's also he's good. I mean, well done to him. All right, let's pick a $5,000 winner. We have all these user IDs. The one that I'm going to pick is going to be absolutely random. So I'm just going to go like this. It's not like planned, and it can't be planned, and blah blah blah. That's the one that I've chosen. So the one that I've chosen is 1982-784-7813. If you are that one, you need to email giveaways@cryptobanter.com from the same email that you opened that account with, and your account will get a $5,000 credit. I'll see you guys again tomorrow. Big show tomorrow. Until then, trade well, my friends.